Bitcoin is on the verge of turning this macro reversal into an official macro uptrend. However, there is just yet one more macro resistance Bitcoin does need a breakthrough to see this come to light. We're going to go ahead and take a look at a few charts today, particularly on the macro chart, to discuss this. Let's get into it. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're having a fantastic day. We're going to go ahead and take a look at Bitcoin today, discussing the macro and the short term, as well as FOMC. As you can see in the chart over here, we can see Bitcoin is actually coming up to retest our macro 9-year long diagonal support line that we did have on Bitcoin. We actually broke down on that FTX crash. We'll come back and discuss what this chart means and what it potentially is telling us for the future later in the video. Now, before you do get into it, smash that like button, hit the comment button, of course, if you do any questions, and obviously subscribe to the channel if you are new. We do daily technical analysis videos and structural analysis videos for Bitcoin and the broader markets. You can also join our Telegram channel. You get updates on news events, information, charts, educational posts, videos, and a whole range of more stuff. You also get access to our VIP channel where we have all of our trading signals. We do daily trading signals in there. We have our group chat for our VIP members with exclusive altcoin analysis, etc., etc. All membership details can be found over here, and obviously our trading track record can be found over here. We also do have a VIP sale coming up, so stay tuned to that. If you're interested in a sale, go ahead and join this channel as the information we posted in here. Let's go ahead and dive in, starting off with the market data. So how is Bitcoin looking? Well, we're up 42.42% for January, guys. Now, I had a look at the previous months. Since 2014, we've seen 7 other months do 42% or higher. So if we're looking at the total amount of months in Bitcoin, this is one of the top 7% performing months Bitcoin has ever seen. An absolutely phenomenal month in January, actually better than we ever had for the last 2 years. We never had a month this strong. Even in the bull market, the most we saw was 39.93. So absolutely phenomenal for January. Volume for 24 hours is up 27%, sitting around 75 billion. We're looking at liquidations down about 15%, around 66 million. Moving on, volatility is up slightly at 2.13%, and of course, as we can see, the liquidations are still quite evenly spread. We did have a lot of shorts liquidating earlier, and we are starting to have a little bit more longs liquidating now as the price is moving down. So again, still a quite even spread between shorts and longs, nothing too significant on either side. Let's go ahead and talk about the broad market. So the DXY is still in the falling wedge structure. We do anticipate this will break up towards the upside. Obviously, we do have FOMC coming up on the 2nd, which can definitely impact the direction of the DXY, guys. Remember, the DXY is the strength of the dollar. If FOMC comes out positive, we generally will see the DXY fall. If it comes out negative, we're generally going to see the DXY rally, as it is expected interest rates will remain high or at least get hiked again. So we can expect the markets to react positively or negatively based on FOMC, and therefore DXY will react positively or negatively. As you already know, the markets are generally tied to a US dollar. So in regards to if the DXY does rise, we're more likely to see the traditional markets drop, and therefore more likely to see Bitcoin drop. So looking at the structure now, we are in a falling wedge. If this does actually complete the structure, we are likely to see a break upwards to around 103, that's 102.95, which of course will result in a rejection for the traditionals and for Bitcoin. So moving into today's analysis, excluding the potential influence FOMC is going to have, we do have this sort of bearish bias still, guys. We still do have this bearish bias. We're at resistance on Bitcoin, we have decreasing momentum. Okay, we're at support on DXY. We have a heap of validations on the larger time frame, suggesting we're at macro resistance. Until that resistance breaks, we still are in a reversal pattern that can still move toward the downside and have a healthy correction before we rally back up. And again, if we do want to have that macro reversal complete, we do need a breakthrough. We'll talk about that in a second. Looking at the Dow Jones, we are at resistance here again. We did not break through the dotted trend line. We do need a breakthrough there, clear these local highs, and more importantly, clear 35,000 to see a rally upwards. Until then, we can definitely head back toward the downside. Looking at the S&P 500, same thing happening over here, guys. We've failed to break through its resistance range as of current. Again, only a 1 day close below. We do need to see a break through this level to see a continuation upwards to 4,300. Otherwise, a rejection and continuation back downwards towards this uptrending support line is definitely possible. That will bring us down to around 3,900, potentially even a little bit lower or a little bit higher, plus minus a few percent. So definitely keep an eye on that, as this is going to be very leading for what Bitcoin could potentially do next. As you already know, guys, Bitcoin and the DXY and the stock market, they're all correlated, guys. They're all connected. Let's move up over here and show you real briefly. They are all connected. What happens to the DXY influences the stock market. What happens to the stock market influences the DXY. What FOMC comes out will influence the DXY and therefore influence crypto and stocks. You can see that they are correlated to a degree of 0.7. The risk return or the return on investment for crypto is generally quite higher than stocks, and therefore we generally see cryptocurrency move first and move more volatile in comparison to stocks. But that doesn't mean that if the stock market continues upwards, Bitcoin won't continue upwards. They do generally move in the same direction. So looking at the stock market here, if it does break upwards, although we have seen Bitcoin rally massively, it actually can continue to rally if the stock market goes higher. Let's go ahead and take a look at Bitcoin on the larger time frame, the short-term time frame, and this chart. We'll start off with this chart. This is a very interesting chart. So for those of you guys who remember way back, like months ago, we're talking about the 9-year trend line. Now, I actually originally anticipated the bottom to actually occur on Bitcoin around this 9-year trend line. I didn't think FTX was going to crash. I didn't think we were going any lower. I actually originally anticipated the bottom to occur around this trend line, and we said around 17,600, 18,000 was our first initial bottom target, okay? It looks like we did that okay. We did actually break down, we're a little bit lower, but what's very interesting is we're coming back up now and we're retesting this trend line. We're doing something called a support resistance flip. This is actually really bad. This is actually really bearish. It indicates that this uptrend could actually be topping out here. This reversal could see a healthy pullback or a rejection at this level. So we are keeping our eyes on that. And the reason why this is significant, and I wouldn't apply any significance to this on a standard day, but taking into consideration where Bitcoin is currently, which is this horizontal resistance zone. We've got a horizontal resistance zone of major resistance. We have our volume range indicating again major resistance, and now we have a long-term log diagonal indicating a potential support resistance flip. All it does, it adds a little bit more data towards the case that we could see a rejection from this $24,000 level first before we do break through. Again, if we do push above this trend line, that would be very bullish, guys, because to break through this trend line, inevitably, we will most likely be breaking through our $24,000 level. We will be clearing that local high over here on that larger time frame, and that will be incredibly, incredibly bullish for Bitcoin to have that continuation upwards. So let's go ahead and take a look at that now. Let's talk about the reversals, let's talk about the macro, and then we'll discuss the short term. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So if you've been watching the channel for a few weeks now, you would have heard this quite a few times. I'm gonna go over it again. The breakout from this falling wedge structure, and we'll go ahead and draw it out. This falling wedge structure here, this entire breakout, this entire move, is what you call a reversal. It's a reversal out of a downtrending structure. The downtrending structure being the falling wedge. The falling wedge is an expansion. Remember, the falling wedge was an expansion pattern, an expansionary structure from the descending channel formation, which represented our bear market structure, okay? This descending channel was our bear market. Okay, an aggressive downtrend. This is a bear market. We had a falling wedge develop within the middle to end of that downtrend, okay, out of that downtrend. What did it signify? That signifies bullish consolidation, because it tells us out of a steep downtrend, we now have plateauing. We now have a decrease in bearish momentum, we have a decrease in volume, we have a decrease in volatility, and we have downward compression. That signifies a reversal is in play. That is what we've seen. We've actually gone ahead and completed that reversal. We have actually technically completed that reversal as we've met the nearest horizontal resistance, nearest macro horizontal resistance. So this reversal is complete. When will this reversal turn into a macro uptrend? The macro uptrend will initiate once we clear that local high. 24,300, 24,000. That is that major resistance zone. This entire zone here is the area we need to clear to turn this reversal into a macro uptrend. Okay, guys? We need to create that macro uptrend to see any continuation higher. The key level on the chart is still going to be that $28,000 to $30,000 level, representing a yearly low, which a bull market can be facilitated above. Okay, a bull market can start above here, a macro uptrend initiates above this level, and this is still a reversal pattern. So whilst we remain in a reversal pattern, we have not developed a macro uptrend. And therefore, if we haven't developed a macro uptrend, we still need to be a little bit cautious. Just a little bit. This isn't me saying I'm bearish. I'm definitely not bearish. I have my bags in Bitcoin. I have my bags on spot, okay? I've been bullish since basically the bottom, okay? I've actually been bullish this entire time here, right? I was bullish way back over here. I remained pretty bullish that entire time. The difference is, guys, you can be bullish and still be aware of potential risk and have plans to execute when those validations for the opposite direction actually play out. So whilst I am bullish, I'm aware that resistance is resistance until it is not resistance, and therefore we need to be cautious. And all I am seeing now on the larger time frame, on the smaller time frame, are more confirmations that this resistance could actually be more significant than we all originally anticipated, and it's going to be a hard one to break through. And if anything, we've seen the price action demonstrate that this resistance is going to be hard to break through. And I said in my previous video, I don't expect any sort of massive move until FOMC. FOMC is most likely going to be the trigger for a continuation upwards or a continuation downwards. Now we'll talk about FOMC just briefly. I haven't looked at the data. I don't know what the forecast is. I'll look at that closer to the day. I usually look at the day before we usually do the video, but I'll say this. If we come in above the forecast, very bearish, we crash. If we come in between consensus and forecast, based on the fact that we've seen such a significant move towards upside and is most likely priced in, I think we're going to see a pullback, okay? If we come in below consensus, so very positive, we will see a continuation. So there's two scenarios there where a pullback is likely and one scenario there where a continuation is likely. So even if we're taking a random luck of the draw, flip of the coin, there's more likely we're going to see a pullback on FOMC than a continuation. We'll take a look at the data a little bit more moving into FOMC, obviously the day before or 2 days before, so tomorrow or the day after, okay? So let's go ahead and take a look at the short-term chart over here. But before we do that, guys, we do have something else I want to show you, which is a potential structure forming on the larger time frame. Again, we do develop structures out of structures. So we had a falling wedge pattern here. We can actually develop a falling wedge pattern on the larger time frame here. That could constitute another correction toward the downside. Is it possible? Yes. Is it likely? No, it's not. Okay, keep that in mind. A diagonal trend line is definitely probably forming over here. Again, will it continue downwards all the way down over here? Unlikely. Is it possible? Yes. Moving on. Short-term time frame. Let's go ahead and take a look. So 4-hour chart, guys, let's go ahead and bring up some of our indicators. Again, we actually did break through at 23,287 level. We did say if we break through a level, that will be the trigger for a continuation. We have seen the start of a continuation, right? We are up around 3% from that break, so it was correct. We broke that horizontal level. We've continued upwards slightly. The question is, will this continuation take us higher, or are we still going to get rejected? Because like we said already, if we break this resistance range up into two segments. We have the lower segment and the upper segment. The lower segment was the higher resistance level, and we're showing the larger time frame. Let's bring up VRPVR. The lower segment was the higher resistance level. Let's go ahead and draw it in. Here is that level over here. Cool. This is a higher resistance level. This is our lower resistance level. It is easier for us to move through this level here as it is to move through here. We can see that already in the price action, guys. Look how many daily candles we had between those two levels here. Look how many candles we had between this level here. We've had two. The price action is almost identical in terms of ROI from those breakout points. Okay, so it's been a lot more volatile above this trend line than it has been below this trend line, as that trend line over here was a trigger for an impulse or a continuation upwards on the smaller time frame, which is what we saw. The question is, will this continuation take us up to 25,000, knowing now that 25,000 is not only going to be the daily continuation and trigger for a macro reversal, but as well as the break and clear of a macro local top and diagonal on this chart. It is increasingly unlikely we move to 25,000 without external influence from FOMC. If FOMC comes out positive, it is likely, but without external influence, it is more likely we are still correct here within this resistance range, guys. So we are still looking for a potential correction. Looking at the trend here, it is aggressive, guys. It's a very aggressive uptrend. There's absolutely no doubt. We're massively above our smaller time frame moving averages. We haven't even retested the 50 EMA on the 4-hour chart since inception of this uptrend. This uptrend is very aggressive, okay? Looking at the Gaussian channel, we have not even retested the Gaussian channel on the 4-hour since inception of this chart. We're moving down to the RSI and moving down to smaller time frames. We'll show you something. Looking at the RSI, since inception or since early inception of this chart, we do still have a bearish divergence. What we're actually printing here is a triple bearish divergence. These bearish divergences are very strong. They're often not seen too much. We don't generally see triple bearish divergences too much, but when we do, they are definitely warning signs. It is telling us that this trend, this move, although it's very strong, it's massively overextended and it's massively continued. It's been continued for far too long according to our momentum. Our momentum is signifying a drop. It is signifying it does want to come down. It's signifying obviously we are losing bullish strength, but the price is still rising, and that is our discrepancy. That is our divergence. Okay, that is our RSI divergence over there. So the likelihood that we do come down is still quite high, guys. Within this resistance zone, resistance is resistance until it is not. Let's go down to a smaller time frame and take a look at the same indicators. So moving on to that market cipher. We've seen weakness, guys. We've seen weakness. We've seen the 50 break on multiple occasions over here. All of these occasions could have been continuation points for moves down. Every single one of these breaks could have resulted in continuations towards the downside, but there have been certain weak horizontal supports that have actually bounced the price back towards the upside. Looking at the Gaussian channel, again, we have seen, a lot of weakness in here. We're breaking through that midline. Breaking through a midline often signifies a continuation through. Again, bouncing from that midline back towards the upside again, showing us and signifying weakness. On the smaller time frame, once more, guys, if we do continue downwards, our horizontal support levels are going to be our prior levels. Looking at these red lines, 22,500, 21,500, 20,800, 20,121, 19,500 are going to be those potential reversal. And every single one of these are bounce points. We're looking for these points for entries again if you have not already entered on Bitcoin. If you have not entered on Bitcoin, then the price ignores any sort of downwards continuation and we do see the price push back upwards. What are you waiting for? You're waiting for a break and close above this local high, guys. We're waiting for a higher high to print on the market here, confirming this entire deviation and a reversal shall continue. Okay, that is what we're waiting for. I hope you enjoyed today's video. If you found it informative, leave a comment, leave a like, and obviously subscribe. You can actually go ahead and join our Telegram, like I said down below. But more importantly, if you're interested in learning how to analyze charts, learning how to trade, and learning how to do everything we did in today's video. Obviously, like I said, in today's video, it's only 17 minutes. I can quite literally talk for 4 hours. There is so much to talk about when it comes to technical analysis. It's an absolutely amazing topic, and you can find out more about it in this course. This is the Become a Trader course. It's a 10-unit course. We have all of our information here. We teach you everything from fundamental concepts of trading. We teach you the basics of technical analysis. We go into more detail with market structures, candlesticks, patterns, technical indicators, market psychology, and so much more, including the essentials of trading such as risk management and much more. So go ahead and email us. You can find our website down below for more information. With that being said, guys, I'll leave the video there. I hope you found this video informative, and we'll see you guys tomorrow. Cheers.